Vishnu Anil Kumar wants to know if liquid funds generally beat or keep up with inflation. He's wondering where to park his emergency fund and doesn't quite like the idea of it being in a bank.
Well, I'd say liquid funds are not designed to generate inflation beating returns, and they are certainly not beating inflation in the current environment of exceptionally low interest rates. But having said that, over a period of time, one can reasonably expect liquid funds to generate better returns than what a bank account would fetch. So from that perspective, they are a suitable alternative to park your emergency corpus. Now, but it's important that while picking a liquid fund or while setting your expectations from that fund, you should not be too guided by the returns, because returns is always a secondary criteria when you are investing in a liquid fund. You should go with a fund which is low on expenses and high on risk mitigating techniques such as high degree of diversification, and maintains a high quality portfolio in terms of credit quality at all times. Returns should always be a secondary criteria, and as long as a fund delivers marginally higher returns than a savings bank account, that should be acceptable. Because when you look at the liquid fund category, it is possible to find funds which deliver outlying returns, but then often that also comes with risks of an outlying magnitude. So I would say that don't get carried away by the returns side of the equation, and focus more on the expenses, on the risk side of the equation, and keep returns as a secondary criteria.